what is yield? Okay, so yield is a common term that refers to a dividend percentage that you get back, or if it's a bond, whatever the percentage is you're going to get paid on your money. Now, you could say, hey, isn't that kind of like compound annual growth? Yes, not yeah. Like if you were going to invest all in bonds and your money was going to make 7% a year, and you didn't take the money, you reinvested in more bonds, yeah, like you could say that yield essentially becomes a compound annual growth rate. But I think yield probably is more saying in the sense that you're going to take the money. So you say, hey, bondholder, U.S. government, here's $100,000. Great, I'm going to buy a 20-year treasury at 5%. My yield is 5%. And I'm going to get that 5% or $5,000 every year. I think they distribute it, 2.5% twice a year, right? So that's your yield. For a dividend stock, the dividend is actually basically an amount of money they give you for every share you own. So say, you bought a share of a company for $100, and the annual dividend they give you for owning that share is $10, your yield for the year, annualized yield, would be 10%. So you bought the stock for $100 and you got $10 for the year in dividend. That's a high dividend. That's a high yield, but it's out there. But probably risky dividend that very likely would get cut under tight conditions. But nonetheless.